What's good, everybody? Today we're going to be talking about this over $17,000 grant that you can use to purchase your next home or to purchase your first home. Now, you guys are going to want to stick around for the entire video because there are some important things that you're going to need to know as far as what kind of score you need to have. Where are you able to obtain this loan, because it's not available in every area or every city, state, and also how you're able to use these funds for your home purchase, and a few other details that are very important to you getting this and seeing success in using it to purchase the home you're about to purchase. Also, if you're still watching this, that means that you are definitely interested in trying to get a home. And I want to make sure that you know that you definitely need to go back and watch the last video I did yesterday, the video before this one, where I actually talked about all of the different deductions and credits that you can get when you file your taxes just from being a homeowner. If you're trying to be a homeowner or to be a homeowner again for the second time or whatever, then you definitely need to know about that. It was up to $30,000 in deductions and credits that I talked about in that video that can help you save money on taxes and is beneficial to anybody that's about to be a homeowner. One of the biggest ways that I mentioned before to actually save money on your taxes by home ownership was with this company, a company that works in solar and getting you installed and set up with solar panels. Is pretty much a 5-star company called Energy Pal, and I gave an example of how a person could save about $10,000 or more through a credit on your income taxes just by installing solar, and that benefit is actually going away in about 2 years. It'll decrease next year and it's going away the year after that. So that's definitely some information you need to be aware of. So make sure you go and check out that video so you can get the information on that. And actually, I'll put a link down to Energy Pal in the description of this video as well, so you can check them out. But definitely check out that video, get all the details about the other benefits you will get once you become a homeowner. Now, before we get into the video, if you don't know me, I'm Will Frazier, your credit and business expert. And if you like to learn information about different funding and grant options when it comes to getting a home, getting a car, or different things for your personal credit, as well as improving your personal credit and different business strategies and funding options for your business, make sure that you hit the thumbs up to like this video, subscribe to the channel, and turn on notifications so you'll be notified of any new videos I put out just like this one. So without further ado, let's go ahead and let's talk about this grant of $17,000 from Bank of America. So they are making an effort to try to make home purchases a little bit more affordable and easier for those in the middle to low income areas, so that more people have the opportunity to try to get a home, and so that it won't be something that's so unattainable or seem unattainable to those communities and those groups of people. So of course, first getting started, you need to know who this is available to. And besides that middle to low income area, this is available in about 260 cities and counties. So I'm going to put a list of states that you can check out that it is available in. So take a look at that, and you can also look and see if your area may qualify by actually reaching out to the bank, to your local branch, and seeing by actually reaching out to Bank of America to verify that your area does qualify. But there are some online tools that can show you mid to low income areas. Now, you don't necessarily have to be a mid to low income receiver, as in the income that you have is on the middle to low side, but being in an area that is categorized like that can be all you need in order to qualify for this grant. So definitely make sure that you do call to verify if you are in an area that is specifically going to be able to be approved for this type of grant. Now, some of the stipulations that are behind this grant are you do have to qualify for a home loan like you would if you weren't even applying for this grant, as far as credit wise. So you do have to have your credit into a good space. So I would say that your credit does need to be at around the mid-6 range in order to try to get approved for this. I would say, you probably want to be on the safe side, somewhere around 640, 650, to try to make sure that you would qualify for this loan. And I would try to make sure at least 2 of my scores are up that high so that I can be sure that my middle score is where it needs to be, because usually they're going to look at the middle score when you're applying for any type of mortgage. Middle score meaning whichever number is in the middle. So if you have a 700, if you have a 600, and then you have a 640, that's 640 is the middle number, and that's the number they're usually going to go with for your score when applying for a mortgage. Now, another qualification for this is going to be that you need to make sure that you live in the home for at least a year. That is a standard qualification, across the board with most of these, loan and grant options. So it's not anything that's new with that. And the loan types that you can use with this, because there are various different loan types. You can have an FHA loan or you can do a conventional loan, and I'll harp on why that's important in just a second. Now, when it comes down to using a bigger bank for a loan versus like a mortgage loan officer versus like a mortgage broker or something like that, it can be a little bit longer to close on these types of loans. So keep that in mind. With the faster options, it's usually going to be around 30 days. With outside options that move a little slower, like a bigger bank or something like that, you should be looking at more than 30 days. It can take up to 60 days. So just keep in mind that it can be a longer closing process. And while you're going through the closing process, you of course need to make sure that you are protecting your credit score, not applying for things or adding anything new to your credit or doing anything crazy financially that could possibly cause you to lose the deal while you're still in the middle of that process. Don't do anything crazy financially or with your credit until you've actually completed that process and are done and have signed your paperwork on the house. And another important factor is pre-qualification versus pre-approval. Now, with different loan options or different places you apply at for a mortgage loan, they may do one or the other. Pre-qualification versus pre-approval. Now, a pre-qualification pretty much means that they didn't verify everything that they need to verify to truly know that you do actually qualify for this loan. With the pre-approval, they have done their due diligence to ensure that they know that you are going to be able to be approved for this loan. So with this particular process through Bank of America, you're going to find out that they do a pre-qualification, meaning that it is possible for them to somewhere along the process actually start trying to verify that information and see something that they don't like, and that can cause you to have to provide extra documentation or do some extra footwork, or maybe cause you to not be able to really be qualified for this, and then you have to find a different route. So just be aware that that is something that can happen, and what you want to do is try to get them to verify as much information as possible to ensure that that doesn't end up being your situation. Now let's talk about the $17,000 in a little bit more detail so that we can talk about how you are actually able to use these funds. Now, as you can see here, it's broken into two parts. The first part is going to be the $7,500. Now that you're allowed to use for closing costs. If you're unfamiliar with closing costs, they are different costs that are associated with actually getting the deal closed and all the people and moving parts that are involved. Now they take that $7,500 and they are able to apply that to your closing costs. So however much your closing costs would end up being for this particular home purchase, they will cover up to that amount. They do not cover things like recurring closing costs, but they will cover things like your title, insurance, recording fees, stuff like that. And if you try to buy down your interest rate, then that is something that can also be included in that. So those are some of the things that you can use the $7,500 for. Closing costs can be a major expense when it comes to getting a house, especially if the seller isn't going to be paying this for you, and the fact that the bank would be paying that for you also makes it a little bit more favorable to the seller because they don't have to try to cover that cost for you. So that is a good benefit to have within this grant program here. And the other part of the grant, the $10,000, is actually 3% or up to $10,000. Now this is to be used with the down payment. So basically whatever home you get, they'll cover up to $10,000 of the down payment, or 3%, whichever one is less. So in order to cover something like a $10,000 down payment, you would want your home to be somewhere around a little bit above $300,000, maybe $330,000 at the max, to ensure that you do not go past that 3% or that $10,000, because anything beyond that you would be responsible for. And now when it comes down to that part about the whole 3%, this is where the loan type is going to be very important, because if you get a loan type that does not have a 3% down payment, then that means that there's going to be a gap there that you would have to cover. So they want you to, and it's ideal for you to have a loan option that's going to have a 3% down payment. And of course, FHA is 3.5% as far as down payment goes, but other than that, they have two options that they list here. The Affordable Loan Solution Mortgage is one that has a 3% down payment, and it actually has no mortgage insurance on it, so that is good. That's an extra monthly cost that you might have had to pay on other types of loans, so it's good that you don't have to do that with this loan. And also there's the Home Possible mortgage, which is a type of conventional loan which only has a 3% down payment, so this one is also a good option for a type of loan that you can get that would not have you having to come out of pocket anything extra, because they cover the full percentage that you would be given through the grant. So that is pretty much the program. I'm going to have a link to this page down in the description, and you can actually call them or schedule an appointment to go into your local branch to try to get more information about trying to obtain this, and hopefully you qualify, and then you're able to get this free money to be able to purchase your first home. Now again, don't forget to check out that last video I did, the video previous to this one, which is going to explain some extra benefits and savings that you can get on your taxes from different things that you're going to be paying for through the home buying process and just from having a home. I'm going to make sure that that's the next video that you get sent to after this one, but don't forget to take a look at Energy Pal as well. The link to them is down in the description too, so you can get all the information you need on saving money on purchasing your home and saving money on your taxes, especially after you get your first home. Now I hope this information was useful. Thank you for sticking around to the end of the video. Again, make sure you hit the thumbs up, share this video with anybody that you know might need this information, and subscribe to the channel to get more information like this. And I'll see you guys next time.